we'll be going over IRS Form 1138, extension of time for payment of taxes by a corporation expecting a net operating loss carryback. So this is the tax form that a corporation may consider filing if they have a reason to expect that their current tax year their company will incur a net operating loss, and they want to defer the payment of taxes for their previous tax year in anticipation of the readjusted tax liability in expectation of that loss. For example, if we're in calendar year 2024, and even though it's early in the year, if the company is expecting that they're going to have a net operating loss for 2024, then they could use this form to request an extension of time for to pay their taxes related to their 2023 tax return. Because on the flip side, what may happen is they go into 2024, they have a net operating loss. They now have to carry it back to their completely paid tax liability for 2023 and amend a return based on that net operating loss carryback. So this is a form that you can use to possibly avoid having to amend that tax return in that situation. So this is a tax form that's primarily available for corporations. You can't really use this as individual taxpayers. So there are, before we get into this one-page form, there are a couple of considerations that I'd like to go over. So the purpose of this form, as we stated, was to extend the period of time to pay a tax so long as the amount of tax that you're deferring does not exceed the amount of the tax that you expect the net carryover loss, or the NOL, to reduce. So for example, you can see right here in line 3, this is just the estimated amount of the reduced tax based on forecast. Then if your previous year tax bill was $10,000, you wouldn't be able to defer paying the entire $10,000 because the net operating loss only would reduce your taxable income by $2,000 in this case. Now, these aren't actual numbers. We'll go over them in a moment. These are simply figures that I put into this form for illustration purposes. So only the tax that would be required to be paid after filing this form would be eligible for extension. So you don't need to file this form if you've already made all the tax payments for that prior year. And if a corporation files Form 1138 and then the expected NOL changes during the year, then you would be expected to file an amended Form 1138. We kind of go into a little bit more detail in our article. I'll cover down on where you can find that article later in this video. So you would file this form after the start of the tax year where you expect the NOL, but before the tax of the prior tax year is expected to be paid. So depending on your corporation's filing status, you would want to make sure that this is filed before the due date of your prior year tax return, but after you start the year in which you expect the NOL. You can file this form separately, or you can file it with IRS Form 7004, which is the application for an automatic extension of time for certain business tax returns. If they're filed together, then this form, the 1138, would reduce or eliminate the amount of tax that you would need to deposit when you file your Form 7004. So if you needed a 6-month extension for your business tax return, then you could potentially kind of use this form to justify, paying less with your extension request. And then if you're expecting a refund, you can actually extend this time even more by filing IRS Form 1139, which is the corporation application for a tentative refund, as long as you do that before the termination date or the period of extension. So now, on the flip side, the IRS can terminate this extension at any time if it believes that the form contains erroneous or unreasonable information, or if it believes that it cannot collect the tax. And any amounts that are postponed may not be subject to tax penalty, but they are subject to interest payments. So keep that in mind. So let's go through this step by step. We'll start with the taxpayer information at the top of the form. So in this case, our president, John Doe, he's completing this form on behalf of his company, Acme Enterprises. So we've got the name of the company, the employer identification number, the address, and city, state, and zip code. So if you don't have an EIN, then you would apply for one. We'll put all the links and references in the show notes. If you changed your business address recently, or since your last filed tax return, you would want to make sure that you have IRS Form 8822B, which is the change of business address form. You would want to make sure that that's filed. So in line 1, we're going to enter the ending date of the tax year of the expected NOL. So if this is 2024 and we're a calendar year business, so we're not a fiscal year taxpayer, then that would be the end of 2024. We're expecting an NOL of $10,000. The IRS does have specific guidance on what you should take into consideration when estimating your NOL. So specifically, according to the instructions, you should consider any government contracts that may have been canceled, in whatever your profit and loss statements indicate. If there are any changes in income items or expense items that would create this NOL that did not take place last year, or any other factors that are specific to your company's operations. So you would want to make sure that all of that is taken into account, and then you should probably be prepared to go into detail and support this with additional documentation. But that's what line 5 is for, is facts and circumstances and reasons why you're expecting the NOL. In line 3, you would use the instructions of your respective corporate tax return to come up with the reduction of that tax attributable. Again, this $2,000, it could be $3,000. It's whatever methodology you're able to justify why an NOL would reduce a taxable bill. So, this would make sense if your company last year was in a 30% tax bracket and you are expecting to carry back a $10,000 loss. You would reasonably assume that 30%, would come out to about a minus $3,000. So just kind of understand what factors are driving your tax rate either up or down in your prior year return, and then make those adjustments. Again, you would need to attach a schedule that indicates how you calculated this in accordance with the instructions for your tax return. In line 4, you're going to enter the ending date of the tax year immediately preceding the tax year for the expected NOL. So if the tax year for the NOL in line 1 is 2024, then this would be the 2023 tax year. So December 31st, 2023. So we covered line 5. Let's go down to line 6, which is broken down into 3 parts. So in line 6A, you would show the total tax. You would enter the total tax that would be shown on the return, plus any amount that was assessed as a deficiency, interest, or penalty. This would basically be for any taxes where you're already facing a deficiency or accrued interest. this would be the tax that was calculated on that return plus that. And then you would, in line 6B, any amounts that you either paid or are supposed to pay, plus any refunds, credits, and abatements. This would include any amount that was assessed as a deficiency or as interest or a penalty if this form was filed more than 21 calendar days after the notice and demand for payment was made. Now, that is 10 business days if the demand and payment, or the notice and demand for payment, exceeded $100,000. And then you would subtract line B from line A, 6B from line 6A. However, this amount cannot be more than the line 3 amount up here, right? So if we said we think that, basically what this is saying is we think that 2023's tax return is going to come in at about $10,000 of total tax liability. We will have paid, or we should have paid $9,000 of that, which means we have $1,000 that's outstanding. Instead of paying this additional $1,000, we're asking that we kind of extend that out until we are able to apply the net operating loss backwards to reduce this $1,000 tax penalty. So, and then, once you have this form completed, you would sign, date, and enter the title of the officer. So 2 notes. 1, penalties of perjury, which allow the IRS to basically reserve the right to throw the book at you if you have done something with intentional or even negligent mispurpose. So if this was just a frivolous filing and the IRS finds out about it, you can be subject to penalties in addition to having this exemption or this extension revoked. And then the second thing is that this should be signed by an officer that is authorized by the company to correspond with the IRS. So that's all we have for this form. And again, you can file this with the extension request, or you can file it as a standalone document. If you needed more details, there is additional instruction on the back on page 2. You can also get more guidance and specific instruction in our article, which you can find on teachmepersonalfinance.com. If you type in IRS Form 1138 in the search bar, you'll see our article appear. And we go into a lot more detail about this with examples and additional resources. So as I mentioned, we'll put links to the other articles and videos mentioned in the show notes. If you like our articles, please subscribe to our newsletter. If you like our YouTube videos, please subscribe to our YouTube channel. And if you have any questions, comments, or if there's another tax question or topic that you would like to hear about in an upcoming video, please hit me up in the comments section. Thank you very much and have a great day.